InFi, Episode 8.
Welcome to InFi, the future of finance, hosted by American economist and author Dr. Robert Murphy. Each week, tune in for dynamic discussions with business pioneers about emerging trends in finance, life insurance, asset management, technology, and more. Now, let's talk the future of finance.
Hey everybody, welcome back to another episode of InFi. Today I'm going to be speaking with Jason Raznick, who is the CEO of Benzinga. Let me read a little bit from Jason's website to talk about how this company came to be. Jason launched Benzinga with just $3,000 in his bank account and a baby on the way. Today, Benzinga.com is the most widely used resource by individual investors. Content is embedded into every U.S. online brokerage, including Fidelity, Ameritrade, Robinhood, JP Morgan, etc. Benzinga breaks hundreds of stock-moving stories every year and is depended on by 25 million individual investors every month. Jason was a winner of the 2021 Ernst & Young Entrepreneur of the Year, Michigan/Ohio regions, and named to the Crain's Detroit Business 40 Under 40 list, as well as the D-Business 30 in their 30s list. Raznick has also been quoted in a variety of financial news publications such as CNBC, The Wall Street Journal, and The New York Post. A graduate from the University of Michigan's Ross School of Business, Raznick founded 2 successful digital startups as a student. So for most of this discussion, folks, Jason and I are going to be speaking about Benzinga, sorts of things they do and trends he's seen in that sector since it was created. But also we touch on near the end a conference they're hosting titled The Future of Digital Assets. And that's on November 14th, 2023 in New York City. I believe there are still tickets available if you're interested. And you can go to the show notes page of this episode to see the details, because among other things, at this conference, Infineo's own Alec Beckman, our head of digital assets, is going to be speaking. So we're very excited about that. So without further ado, here is my discussion with Jason Raznick. Jason, welcome to the InFi podcast.
Thanks for having me on.
Well, maybe just to set things up and paint the picture here, can you just explain, you're the CEO of Benzinga, can you explain what it is that your company does?
Yeah, we're financial. Information is harder to consume these days in the sense there's a lot of it. So we try to make information easier to consume. We're the largest vendor of financial news to the North American brokerage space. So you think of brokerages like Fidelity, Schwab, Ameritrade, Robinhood, Webull, Public. We are a vendor. We have an in-house team. We're over 100 people. We produce content 24/7. We originate. So we also do events, like that's what we're going to talk about later, FinTech Deal Day and the future of digital assets. So we have the CEOs of these companies. We interview them. We break stories. We're based in downtown Detroit, Michigan. And we've been doing this for about 13 years. It's grown in size and we have a lot of readers. We take our position of democratizing information for the average investor very seriously. When I started the company, the reason I started it was because I thought there was small cap companies weren't getting coverage. And I thought it was unfair that hedge funds would have an edge versus the average Joe. And so Benzinga was born.
Okay, so just on that particular point, the idea being that more people would invest in these smaller cap companies if they just knew about them. And so that was partly what your service was?
Partly, but also to get better information. So there are some companies, microcap companies, that aren't real and they will attach the word crypto or cannabis to their name, but they're not really that business. We try to give better information so people can make better decisions. Yes, we have newsletters where we give stock ideas. I've been on this Ozempic trend for 2 years, 3 years now, telling everyone to buy NVO and LOY, which are up 90, 60, 70%. So we do make people aware of trends, but in the small cap space, it was trying to give a better information that wasn't out there to the average Joe. So yes, it can bring people to buy in those stocks, but it can also just bring more information to a sector. You look at EV, there's a company called Tesla that when I started buying it, it was 2009 or 8. No one really heard of it. No one heard of it, and they thought it was crazy. In 2013, I said to someone that there'll be one of our shows, there'll be a Tesla in every parking lot. The guy after is like, Jason, you shouldn't say that for hyperbole just to get like people to get a reaction. I'm like, no, I believe this. And so what happens is in the small cap space, when people don't know things, fear things. And we try to do is bring information and show trends where things could go. And if we can inform, let people decide, we think that's a good model for helping people make better decisions. Like, I'm not going to go have a new stock idea every day, because that's, to me, impossible unless you're a technical trader.
Okay, great. Has your business evolved over the last 13 years?
Yeah, for sure. You start with equities, but then, different things come in the market, from crypto to sports. We try to bring a unique perspective on the things we do and help people make decisions. And so when more information sources came up, we have to do a better job at making it concise and get to the point of why people want this information. We also have to create products that makes people's lives easier. We do a lot more video, in the crypto space. I've been railing forever, since the whole Voyager experience and being on the UCC, about trust and transparency. To me, crypto is all about trust, and explaining that to the average user is really important. But what happens is people find something, like the meme stock craze. So I'm in the movie Eat the Rich, when the whole thing with GameStop, we were the room where it happened. We had the hedge fund that was short GameStop. The hedge fund manager came on our show. We had, say, 1,000 people in the room, and then he came on. All these Wall Street bettors came on. It was 30,000 people. This was the start to the GameStop craze. We brought the action on our channel. It was crazy. And it just showed that there's new channels, new formats for people to get information. Think about what life was like before Twitter and the internet. How would you learn about Tesla? How would you learn? You would learn it by seeing it in real life. There's people that say, buy the products you like, which is true. But now with information, you can find out a lot more information through the power of the web. But also, you got to know what information is accurate, what's true. And that's very important.
Yeah, I do want to move in a moment to the Voyager issue, because I know you're intimately involved with that. But I'm still curious about your business model. I know, for example, like the Associated Press and other organizations, they're struggling with, hey, if we send real reporters overseas or whatever, and they cover some issue, and we have to spend a lot of money to gather the information and then we report it, we can try to put up a paywall, or we can try to average, but no matter what we do, somebody's going to steal our stuff and then put it out somewhere else. So, have you struggled with that? Like the trade-off between how do you collect revenue for what you're doing and the resources you got to spend?
Yeah, that's media. I remember in 2008, 9, 10, or Business Insider was really good at reading articles in the Journal or Financial Times. And then when they do that, then they'd have an opportunity to write the 2 or 3 salient things that people would want to read. And so the Journal or other places would argue, oh, this is taken away from us. Or then others would argue, no, this is actually helping us because it's given another entry point into us. So that's stuff to wrestle with. But you're right. So what you have to do is create a better experience, make it easy for people to subscribe, and make it easier so that they can just log in and get what they want done. There are no easy answers on that. You could look at it as one way is it's more distribution your brand gets out there. Another way is, we could have had $10,000 in subscriptions. So it's a tough question for, I think, people from the Wall Street Journal to Benzinga.
Okay, can we, since you brought it up, go through, can you explain what the Voyager issue was and your connection to it?
Oh yeah, so Voyager filed bankruptcy after a loan to 3AC where they put $650 million 3AC with no collateral, I guess no due diligence. I thought there's a thing called USDC operated by Circle. I had the CEO of Circle on my podcast a while ago asking, why can different brokerages like Voyager or Celsius or whoever, BlockFi, give different rates on USDC 9%? The answer I was given is that we disrupt the banks. We disrupt the banks in the sense that when someone gets a mortgage loan from a bank, they get a car loan, they have credit cards, there's interest that's to be paid. And the banks make all that money now. Instead, that's going to change. With USDC, we're giving some of that interest back to people like myself, to people who are invested in USDC. And that's why Voyager and the were able to pay 9%. This is what I was told. And by the way, maybe that was what Circle CO thought, which I don't know how that works, but what really happened is these brokerages were leveraging themselves up with hedge funds that wanted to borrow to go make more trades. When the hedge fund went belly up, our USDC went belly up. It's as if you have your money at E-Trade and it's sitting there. You own some Tesla, but you also own maybe some T-bills at E-Trade. If E-Trade went belly up, you wouldn't lose your Tesla or your T-bills because there's something called SIPC insurance. In the crypto case, there is not that, which I didn't understand. I was told Voyager was as safe as JP Morgan. There was no risk, nothing. And when this happened, yeah, it was bad. I had a lot of money there in USDC, not even in Bitcoin. And they went bankrupt. There's a whole bankruptcy process where there was bidders, FTX, Binance, or they could have just did a self-liquidation, what I suggested in the beginning. But a lot of the creditors said, no, it's a terrible idea. And then they're like, why didn't we do that from the beginning? Exactly. Everyone, on the sideline thinks they have the answers. If we would have done that from the beginning, we'd have got a lot more money on the per dollar. And so far, they've gotten like 35 cents on the dollar. And there's outstanding issues with FTX where there's money sitting in an escrow account that'll hopefully come back to us. But the thing that's super sad about it, I think crypto and digital assets, we have a Future of Digital Assets conference in New York in November 13th or 14th. Okay, I'll do a gratuitous plug, bzdigitalassets.com. But the thing that I think is really sad about it is in crypto, I think it's about trust and transparency. So if you're a big believer in Bitcoin, which I know many people are, I just had Kathy Wood on my Raz Report, and she believes Bitcoin will go to $1 million a share. The question I asked her was, with BlockFi, Celsius, Voyager, like going bankrupt and people owning Bitcoin in there and they lost some of it. Instead of keeping it, how is Bitcoin going to recover in the sense, like, where are they going to hold it? And the answer is you got to hold it in cold wallet storage. You got to not necessarily do it through a brokerage. That takes some time to get everyone on board. The point she makes is as institutions open up to buying Bitcoin, and there's only, so many Bitcoins or 20,000 Bitcoins out there, the price of Bitcoin will go up as institutions start buying it. And that's true. The problem is, how does the retail person own it when you had that situation with a Voyager and these things? And it was not, and by the way, the average Joe got hurt in it. The average Joe got hurt. I would talk to people all the time that really got hurt with Voyager and other companies that went bankrupt. And that's who we fought for. But bankruptcy with attorneys is definitely an arduous process.
Okay. Just if we could expand on that issue, because I know you talk to some crypto enthusiasts and they can't understand these scams. The whole point of something like a Bitcoin is that if you control the private keys, it's yours and nobody can take it from you. It's not like having $100 bills where after a while you'd be worried walking around with that on you. And so that's why you go deposit it at a conventional bank. But here, why would you hand control over to some third party? And then I know there are various responses. Some people say, well, the average person doesn't want to deal with a wallet and having to keep track of private keys, and they're worried if they lose it, it's gone. Whereas if it's with an institution that you trust, it's kind of like if you forgot your password, that kind of thing. So can you just speak to that, those pros and cons of giving your crypto holdings over to some third party versus, maintaining it yourself and being responsible for it?
So the natural thing is not to maintain it yourself. The natural thing is to have a third party maintain it. It's the natural thing of you sell a house. Okay, let's say you sell a house that you've had for years, and let's say you make $200,000 from what you own on your mortgage. And you have $200,000 cash. The natural thing is not to go put it in your safety deposit box or your bank account or in your house in a safe. The $200,000 thing. The natural thing, and I would say more than 90% of people do this. They put it in their bank. They may put it in a high yield savings account, a T-bill, the stock market, real estate, etc. Same thing in crypto. People want a similar experience. Yes, crypto is changing the game for wiring money and it's one-to-one and you don't have to go through a bank and all this stuff. But the natural thing is not to just go get a cold storage wallet, then get this code and then go put it in your safety deposit box, because if you lose the code, then you can't get your money again. And then if you get this cold storage wallet, well, what if someone breaks into it? And you may say, no one can break into it. Well, I don't know, like, yeah, and then you could say the same thing about like JP Morgan. Your money's JP Morgan. What if someone breaks into it? You have protections. You saw Silicon Valley Bank.
Mm-hmm.
Silicon Valley Bank had an overrun, and the people that had money there, they were freaking out that weekend. And what happened? They all got their money back, all of them. But us crypto holders, we got screwed. We didn't get our money back. And I'm not saying if you're in Bitcoin, there's risk that USDC should have got our money back. And the natural tendency is to go put it somewhere else. Now, what I've learned is that's not how you do crypto. You're not supposed to go put it with a broker, I guess. You're supposed to have a cold wallet storage thing and do it that way. And I don't know. I think the average investor, just like when Benzinga provides information on small cap stocks to level the playing field. I don't think the average investor is thinking, I'm buying some Bitcoin and I'm going to go put in a cold wallet storage. Maybe it's $5,000 worth. Maybe it's $1,000, but they're not going to go to the hassle when it's just easy to go in the Voyager app and buy Bitcoin. And by the way, a lot of these companies would still be around if they didn't over leverage themselves and do these loans to hedge funds. Like Voyager, part of it was like trying to keep up with your neighbor next door and give more interest to your borrowers. And they didn't need to. They needed to let it be a solution. And it's like, I heard this line today. You overestimate what you can accomplish in a year, and you underestimate what you can accomplish in 10 years. If Voyager and others didn't get caught up with giving the most interest, yes, their quarterly earnings would have been hit, I guess, because maybe they didn't have as many accounts open, but they would still be around and making those solutions about buying Bitcoin a lot easier, and maybe have a cold wallet storage. At least that's my take.
Okay. If you're allowed to speculate on or to comment on, is it more you just think the people where they had poor risk management, or did they do things that you think like, no, they should have known not to do that?
Oh, I think it's both. I don't think if you have a $800 million company, I guess, let me say this. If you personally have $1 million, okay, you have $1 million, are you going to go put all that $1 million with one firm? Meaning like, are you going to say someone says they can pay you interest? I'm online right now. Okay. I see my banking direct is 5%. Am I going to go put all my money with my banking direct? I don't think you do that ever. I think you diversify, especially as you have so many borrowers on your system or so many investors, customers. I think you diversify. And I don't know if it was like they were thinking it was fraud or stuff like that, but that I can't attest to. But I just think $600 million loan, you just would never do that. You would just diversify, because you never want your business dependent on one company, right? Like, I mean, I can tell you some of the customers of Voyager who at the end were like, why didn't we just look away in the beginning? But they were always like, let's keep the app open. It's amazing. Let's keep the app open. Let's get it back open and let's sell to some, And by the way, how many legal fees and lawyers on the M&A negotiations, when they would have just done the liquidation, you would have got much more money back. But, I couldn't talk sense to everyone. And the other thing is, it's easy in hindsight to criticize. Always. It's always easy in hindsight to criticize. I just think that you don't give one loan to one big borrower, and that hurts the loan industry. Listen, if 3AC didn't go bankrupt and didn't close up, we wouldn't have been here, And then if FTX didn't close up, I mean, there's a lot of things that happen. And then there's a lot of things that happen with, Binance and FTX in the bidding process for Voyager that I think kind of partly caused the CEO of Binance to go tweet against FTX because he lost the bidding for Voyager and he was mad at FTX for that. And FTX said certain things. He's mad at FTX because of the government stuff too. But I mean, that's what we discussed. Like at our Future of Digital Assets, bzdigitalassets.com, I'm going to show some emails like that are crazy because people would accuse me, I wanted this, or this guy's my friend. I fought for the average Joe. Like the average Joe that had $10,000 there, $5,000 there. If I could have gotten off the UCC, then I would have saved a bunch of money because this person will be on a panel. We have people at the easydigitalassets.com that are people that bought claims. They bought bankruptcy claims from FTX, Voyager, Celsius, and they're going to be on the panel. I could have sold my claim to Voyager for like 75 cents on the dollar, but then I couldn't because I was on the panel of the UCC, and it would, I guess it would have looked bad. I guess I would have had to resign from the panel, and then I'm like, I got to stay on this panel. I got to fight for the average Joe on some of these things that seem so obvious, and we're just not getting done. And but being on the panel cost me personally an extra nice small 6 digits.
Can you explain just for the listeners, what do you mean that you're on the panel of the UCC, just if they don't know that terminology?
There's a thing called a uniform credit committee in a bankruptcy. They're usually made up of 7 people or 9 people, and they help choose the lawyers in the beginning, and they're in weekly meetings. Don't have a ton of power because in a bankruptcy, the debtor controls the process. So at least the first 90 days. So even if I wanted Voyager, which I did, to liquidate itself in the beginning and get 80 cents on the dollar or something like that. That was my opinion. The creditor, the UCC, the 7-person committee that were supposed to be on it, we didn't have any say in that. The debtor, the one that files bankruptcy, they control the process for the first 90 or 120 days. They control the process. And the creditors, the creditor committee, votes on certain things, but we don't control the process. They vote, the creditor committee vote on like a thing called CURP, which is like retained employee thing, and like retained number of employees. Or the credit committee votes on releases for executives, or votes on a deal like FTX buying it, those kind of things. So most bankruptcies have a UCC, Uniform Credit Committee. The power that it has is limited, for sure, in a big way. If it wasn't, that'd be amazing. I think the bankruptcy laws for companies and this whole process are for sure antiquated. Because if you're not on the committee and if you weren't like getting updates and there's reasons why they don't do updates all the time, you feel left out and you're like, why is this? Why are the executives getting releases? And why is there's just a lot of things like that. And so bankruptcy law to me has not caught up with social media and the web. In the Voyager case, I would tell people, there's this one guy, I would tell him to go onto the court case, go on the live thing, submit a docket. I literally tell this person. And then he used this like against me, like my conversations with him as a negative, which they weren't a negative. And his stuff and what they did probably cost the Voyager creditors another $3 to $7 million in legal fees, probably more, going back and forth on issues that didn't matter or wouldn't change. So it was really an interesting case in terms of street legal justice, where people tried to come in and make points, but they weren't points that really could change. The only way things change is if the most money we can get in the shortest amount of time. But the case went on for weeks and weeks after, legal fees. I think Kirkland Ellis, like the attorney for Voyager, I think they got like $27 million. And I think that's a small amount compared to what they'll get for like Celsius or FTX, not Kirkland, whoever they have, Sullivan. Like these lawyers make a ton of money. And what I worried about is this chef and his wife who's a waitress at a restaurant. And they would call me and I would talk to them. At the beginning of the process, I'm like, yeah, you're going to get more money. And then just kept going down and down because FTX, then Binance, and then the government. Oh, yeah, that's the other part. And the government wouldn't let us close the case because they were saying that USDC is a security and all this stuff. There was all these things that like were just going against the creditors that should never have gone against the creditors. And because the government, so when the future bankruptcies happen, like BlockFi, for example, they already like sold their stuff to cash, so they didn't have to deal with the bankruptcy process and is crypto a security or not. That also delayed it. So it wasn't just people appealing, but it was also the government, SEC, and everyone were making all these rules. And I'm just sitting here thinking, some of the people have at their asset Voyager like are life savings. I'm not saying all. I'm saying some of these people. And if you think about it, I know some stories of someone having Bitcoin at Coinbase. They moved it to Voyager, all of it, for 2 reasons. One, they heard from the CEO of Voyager, and they thought it was a trustworthy platform, more trustworthy than Coinbase. Coinbase was getting a lot of like the media pressure the government. And then Voyager gave a better interest. So he moves all his stuff to Bitcoin. He bought it many years ago. It's worth a lot of money. And then 8 months later, he loses more than half of it. I mean, it's crazy. It's crazy. Like, it's crazy, especially because you don't have SIPC insurance. The whole process is crazy. And I guess I appreciate the lesson learned at I guess not young age, but middle age, that just, if it sounds too good to be true, it probably is.
Yeah, exactly. Okay, well, yeah, thank you for sharing that. I know you had a lot of pertinent details there, and you wanted to clear the record. You've alluded to, so can you talk a bit about the Future of Digital Assets conference that you're hosting?
Yeah, so the Future of Digital Assets, we're very excited. We have like an amazing agenda. You can find that out at BZ, B as in boy, Z as in zebra, digitalassets.com. But we have amazing speakers, companies. You got Brett Harrison, who was at FTX as the president of the US, highly sought after speaker. Now he's starting a new company called Architect, which I'm very interested in. You got Richard Weidman from Google Cloud Web3, CEO of Pudgy Penguins, Luca Nets, Caitlin Long, Custodia Bank, basically the leaders of most companies. Invesco, head of their ETFs business. Venable, there's like the who's who, Kevin O'Leary to MoonPay head, Vanek, just Tron, CEO of EDX. It's Tasty Crypto. I mean, if you're a believer in crypto whatsoever, this is the place where you're going to be able to network, connect the best and brightest in the space.
Including, I should mention, Alec Beckman of Infineo, our director of digital assets, is one of your featured speakers too.
Yep.
So just for the listeners.
I just saw him here too.
So, how is this a new conference, or is this something you've been doing before?
And James Putra of TradeStation. We do the FinTech Deal Day the day before, and last year we did crypto, and it was good, and we got great response. People loved it. This year is different because this year is that we got heads of UCCs and the lawyer who runs the Celsius process will be there speaking. We are bringing everyone in the space to this event. And so it's different in that regard. We also have a packed agenda, and it goes all day, and it's in New Day after is a FinTech Deal Day for B2B, people looking to make deals. I mean, you should do some interviews there. You got Polygon Ventures. We're bringing the who's who to the space, and a lot of the speakers aren't even on here because they didn't want to be, because they knew that if they were on here, the media would follow them here. I just interviewed, the Mooch on it, and Anthony Scaramucci. I did Kevin O'Leary. Ledin is another one that buys claims. So if you're in a bankruptcy, you could sell your claims. But yeah, Alec Beckman, Infineo is one of the featured speakers for sure. You got your Real Vision guys there too, Ash. So it's an all-day event. What we try to do is make these events fun, educational, but most of all, people meeting and networking. Like, that's what it's about at our events. Like I say, sit next to someone you don't know. No, seriously. And if you're next to someone, you got to move seats. Like, it is that sort of event. And it's something we've been putting on, and we really take pride in our events. We just had an event in Chicago. We had about 1,900 people there in the cannabis investing space. We really take pride in driving connections. And if you say there's a person you want to meet and they don't look like they're at the event or going to be, we'll reach out and we'll get them to the event. Like, that's how much pride. I just did Tim Draper, who owns who owns a ton of Bitcoin. I don't even know how many now. He bought it in a bankruptcy thing. I just interviewed Tim Draper. I don't know if he's officially coming yet. We'll have his video there, but hopefully we'll see.
Okay, great. Now, can you just speak a bit? So some people, they think digital assets is just a fancy way of saying cryptocurrency, but at this point, I mean, it is a broader category.
Yeah. I mean, I think digital assets to me can be real estate. It can be fractionalizing real estate. It can be anything that you can transact digitally. I mean, I would argue that Venmo, PayPal are digital assets. My money in my Venmo account, I understand the currency is USD, but it's digitally. It's digital. I would make an argument to you if I invest in Yield Street, which owns from real estate assets to financial notes to crypto funds, Pantera and stuff, and we have Pantera guy coming. I would argue that is digital assets. So digital assets are broad. And in this day and age, it's good to diversify. See, that's the one thing I'll tell you. So if the stock market goes down a lot, yeah, that's not fun, but I'm diversified into other assets. Digital, it could be Bitcoin. It could be having money in a Venmo account. It could be investing in fractionalized real estate or the down payment, the home equity loans for houses. I mean, that's as far as it goes. And listen, you and I are talking here, but in 96, 97, the internet, I started a textbook site in 97, and people said it's going to fail because people aren't going to give their credit card over the web. Well, I know people give their credit card over the web, and they do a lot more things now too. So is future of money, is that really not going to, people are not going to do future of money is digital. And so how do you transact that? You don't have to go through a middleman. Internet, you wanted tickets to an event, you always had to go through a middleman. You didn't go to a direct person. Now I get it, like Ticketmaster is a middleman, but you can also buy directly from others. Internet enabled that. Same thing with currency or digital currency or trading, or if someone wanted me to wire them money. If you use the bank, I have to go through 3 or 4 steps with wiring them through my key, my private key, and then their private key. It was as easy as 1, 2, 3. I mean, I had to verify the security, but beyond that, there was no one else to get in the way.
Yeah, so I think if you could just expand a little bit, a lot of our listeners are already going to be up to speed on this, but this is partly what we're trying to do is to provide the education on this, that they're thinking, oh yeah, I know how real estate works, I know how equities work, I got fixed income, and then they would assume digital assets is this other thing where the underlying thing that you own is just purely digital. But as you said, like you could have digital assets that are tied to real estate. So can you just, I know this is basic stuff, but just so people are thinking about it right.
It's not,
can you explain?
It's not like it's not like total basic. So like at our event, BZ Digital Assets, we have real estate companies that'll be there that do real estate deals. Instead of like just investing through a traditional SPV model where you're investing out of your cash, they have this crypto stuff that can be sold at any time and transacted and transferred, and they can sell to multiple people at one time because crypto enables more democracy. It enables more democracy in terms of like how they can raise money from thousands of people through crypto and make it super, super simple. And then a whole resale market. So an example would be, say I invested several years ago into a pre-IPO company. For me to go sell it, there's other marketplaces to go sell stuff to. But if I did it through crypto, the ledger's there, it shows the history of it, but I can also go trade it a lot easier. I can go trade it a lot easier without having to go through a million different processes. And I just think of it as related to the internet. 30 years ago, you wouldn't have a one-to-one relationship with someone and sending out money, and Venmo, you go right to one person. That sort of has a characteristic. But when you talk about Bitcoin, for example, Bitcoin, the government can't inflate it and produce more of Bitcoin. The government produces trillions more in their money. They can print whatever they want. You can't go print more Bitcoin. It reminds me of where gold was back in the day, and we were traded off that value. Bitcoin is a limited quantity, and that is what is key in these discussions.
Yes,
and that's where in the real estate. And by the way, I haven't invested in much real estate in a fractionalized way, but I know it's gaining a lot of traction because there are companies just built on that, and they're able to truly grow and diversify by doing that.
Yeah, exactly. So that's what we're excited about here, is this the tokenization of real world assets, that combining the ease and flexibility, convenience of transferring a digital token to somebody through a blockchain, but yet it is pointing to a real world asset. So it's kind of, we would argue it has the best of both worlds there.
Have you done one by any chance yet? A real estate one?
We haven't done real estate here. We're focused right now on life insurance policies. We're trying to
through crypto.
Yeah, through blockchain. Yeah, digital tokens represent pointing to.
Interesting. Is that growing?
Oh yeah. That's. We like to say we're the first in that particular space, but yeah, we think that's going to take off really fast.
So how does it differ than investing in life insurance policies just through cash?
I'm just not sure what you're asking me.
you're doing life insurance policies through crypto, right? Like fractionalized crypto. Is that how you're?
That's one aspect. Yeah, we're going to put some in a pool and then issue digital tokens that are fractional claims on the cash value of the pool. Yep.
Got it. Okay, so that's a way to break up the pool. So yeah, I get it. So you have a pool of these values, and then you're going to sell it off through digital currency because it makes it easier than doing it another way. Is that the idea?
Mm-hmm. Yep.
Yeah, and that's the power. And that's the power to do what you're doing would have taken 10 more steps. The power here is, and that's what I like. So, another bad rap that digital assets got was, NFTs, right?
Right.
People are buying NFTs to capture Logan Paul's breath. I don't know, and everyone was just making NFTs of the first slam dunk, this, and that's where the concern is in the market, where if you just keep doing that, you keep creating new NFTs, new things, eventually that has to crash because it's just, the supply is infinite because you can create NFTs on anything, right?
Yeah, can you maybe speak a little bit about, like, in the beginning, it was, a certain group of people that were interested in Bitcoin and things, but now, it's bigger institutions are more interested in tokenization and blockchain. So have you just noticed over the years, like, the shift? Can you comment on that at all in terms of, like, let's say, like, regular financial people who are more looking into this and realizing this is a real thing and this is, part of what the future is going to hold?
Yeah, it's exactly true. It's becoming, this is how this works. Like, we could say retail drives a lot of it, but without institutional buy-in, like you're seeing BlackRock get involved and ETFs finally going to be created, the rest will follow.
Mm-hmm.
There's only a certain amount of supply of Bitcoin. So, and Ethereum is the back end to a lot of other apps, right? So, to me, and why we're very excited about the Benzinga Future of Digital conference is because there's new blood coming to this industry. We have multiple large firms from Invesco, but other ones that I don't know if I can name or not that will be there, and they are bringing their money to the space. When anyone's bringing money to a space, that brings more demand, right?
Mm-hmm.
If I said to you, here's 3 companies that are collectively worth $2 trillion and they're going to be at our events, I would think you'd want to be somewhere in that crypto space, okay? Because you're like, I don't know, Wayne Gretzky's line was, I go to where the puck's going to be. Well, that's what this is.
Mm-hmm.
That's what this is. Now, this is also where you have to be buyer beware, right? You got to be careful what you're doing. And then that's where you have to diversify. So when I had money at Voyager, I had money at other places too. There was a little bit of diversification, and I was in the process of diversifying more. Didn't do enough quick enough, but it's diversifying, but you want to go where the puck's going to be. You're thinking about your life insurance policies and fractionalizing that. These institutions are coming to this market. Why? Because it's more efficient. And can they save money and not have to do all these transaction fees? Think about ACH fees. Think about wire fees. Doesn't exist. Yes, certain places charge it, but the cost is almost zero. So it is imperative that events like the Benzinga Future of Digital Conference happen because we need to talk about the industry. We need to talk about the stories of where it is solving problems, where it is being utilized. If BlackRock is doing more deals, et cetera, we need people to be aware of it. That's where it comes down to. And why do we do these events? We pick industry sometimes. Like, listen, it may be a lot easier for us to do a mining conference. There's 1 million miners. Everyone wants commodities, lithium, copper. There's 1 million companies. This is a tougher conference because you have 2 sides pulling at it. Guys who think, oh, crypto is, whatever. Then you have now these big banks coming into it, and now again, these ETFs approved. It's a very exciting thing, but no one wants to be first or what have you. And so the people that are at our event, Benzinga Future of Digital, they're going to see the companies that are going to be taking names and numbers. And then you're going to be a year from now and saying, shoot, I wish I would have bought Tesla when it was at $8.
Mm-hmm.
$8. Like, I originally bought Tesla $3,400 worth. And it grew into, a 6-digit investment. And that's how I originally bought it. And it didn't sell a share. And you're going to find many opportunities like that in crypto. Kathy Wood says $1 million a share. Scaramucci says 250,000. Like, these are real numbers, and I don't think they're just saying it to talk their book. I think they look at the dynamics. And I know people like to sometimes rip on Cathie Wood. She's one of the best investors of our time so far. People said, oh, she sold NVIDIA too early. She's bought NVIDIA at $5. She took that stuff that she sold and bought another company, a flying car company or something, and that went way up. So I listen to smart people that have a track record of success. And I don't have a short-term view. My viewpoint is we overestimate what we can accomplish in 1 year. We underestimate in 10 years. Again, 2014, a guy that used to work at Benzinga, I said on the show that there'll be a Tesla in every parking lot. And he took me aside after. He's like, you shouldn't put hyperbole or fake things out there if you don't believe it. I'm like, no, I promise you, that's not promise that. That is my opinion. And I guess I was wrong. There's not just one Tesla in every parking lot. There's like 5 Teslas in every parking lot. And so you never know how this stuff takes off, but it's people like you doing your shows. It's people like us doing events, and we hope others can come. And by the way, if you're listening to this and listen to podcasts, you can use RAZ20, R-A-Z, so RAZ20 for 20% off tickets. I don't know how long that code will last. There's like a certain allocation of them, but I know it's available now, and I know this thing is growing quickly, but I want to be where the puck is going, not be left behind, and then have those things where you're like, oh, inflation's gaining this, so I'm losing money. I want to diversify, have money here, there, but also, diversify and be on the side where money is going to. Like I said 2 weeks ago, if you don't own Bitcoin right now, you're crazy. You're just crazy. Like, I'm not saying put a huge amount, but diversify. But when you see all this money coming into a market, if I told you right now, we pick some random stock, okay? Let's just say Eli Lilly, it's a stock I own, but because of the weight loss stuff. But if I told you right now that $100 billion or a $1 trillion company is going to start investing $10 billion a week into Eli Lilly, you're going to feel a lot better about, hey, I should put money in that stock because that's going to be a lot to bring it down. Who's going to sell that matching thing? Well, that's where I feel that crypto's at this stage. And so you got to pick your things, and you have to learn about wallets. Like at our event, you'll learn about wallets. Like I didn't do a wallet, and you may think it's so easy, but until you actually interface with it and do it, it's not easy because you haven't done it before, Right. So I guess that's what I would say in a long-winded way. And I hope to meet many of you guys at the Benzinga Future of Digital, and it's easy digital assets. And the day before is our fintechdealday.com. And you can use RAZ20 to get a discount.
Well, yeah, I know at least 2 of our Infineo staff are going to certainly be there, but Alec, obviously, and some others in the area. While I still have you here, Jason, can you just talk a little bit about the Raz Report, what that is, and what the guests you've had and such?
Yeah, so the Raz Report is a new podcast that it was around for a while, but then I stopped and then brought it back on, and I do them basically every week. Recently had on Tim Draper, who is one of the most successful investors in crypto. He bought, it was 6,000 Bitcoins when there was that whole break-in many years ago for, it was a few $100s each. He bought it, and he's one of the most successful venture capitalists in the world. Anthony Scaramucci, one of the heads of Robinhood, Cathie Wood. We had none other than the Wolf himself, the Wolf of Wall Street, Jordan Belfort, CEO of Public, Caitlin Long. I'm just trying to see some other one. We had Mike Tyson, Ric Flair, some professional golfers on it. I'll give you what the basis of it in 1 second. And then there's several others where Bruce Linton, who was one of the first, sold us coin for multiple billions in the cannabis space. Jake Paul, we had on from, one of the founders of Better. Bob Parsons, the GoDaddy CEO was CEO, and then Extreme Golf, and just many more. And what I do on there, I try to take people behind the scenes. I try to give people the behind the scenes look at what these guys are doing on a daily basis and how they're building what they build. Like that's what it's about inspiring people, but also overcoming obstacles. And so we do some quick questions like, who are the most famous contacts in your phone? Or what was your worst or first job? And then it's like, what is your take on Bitcoin? What's this? And I try to get to the real answers on it. And it's called The Raz Report. I think it's the space Raz Report. Take a listen. Feel free to send me feedback. My email is jason@benzinga.com, BENZINGA.com, or you can follow me on Twitter at Jason Raznick, JASON RAZN is in Nancy, ICK. And hopefully you get out of it. And feel free to send me feedback, the good, the bad, the ugly.
Okay, well, great. Folks, my guest has been Jason Raznick, the CEO of Benzinga. Jason, thanks so much for your time and your insights.
Thank you for having me on. It's been an honor and a pleasure. Hope to meet you in person very, very soon.
Okay, great. Yes, we may be at that conference. So thank you, folks, for tuning in, and certainly encourage you. We'll have some notes on the show notes page if you missed any of the thing that Jason said to be able to look up what he was talking about. Thanks for tuning in, everybody. We'll see you next time.
This concludes another episode of InFi, the Future of Finance, with Dr. Robert Murphy. The information provided is for educational purposes and does not constitute financial advice. Consult with qualified professionals before making any financial or investment decisions. For more information on the host and for previous episodes, visit infi, thefutureoffinance.io. Thanks for listening.